Hello everyone and welcome to another edition of the Forex Technical Market Update for Monday, August 24th, 2015. And what a ride we have had over the last 2 days or so. The big news is that the stock market is down pretty significantly off of the highs that was made in May, and also over Friday and Thursday and Friday, the markets took a huge sell-off. Now, I'm going to start this technical update with an analysis of the S&P 500 and why it's important that you really understand how to analyze market action and how to analyze price action and what exactly prices are doing. Okay, so the S&P 500, let's see what happened. The market, and I said this before in the technical market update, but for those of you who didn't see it, the market for a number of months were stuck in this price range. The market was stuck in this box consolidation pattern. So we see it entered this consolidation pattern in February. So February, March, April, May, June, July, into August. And what we saw here, we saw that the market closed below this channel consolidation. And once the market closed below, we had a huge reaction sell-off. And the futures this morning are also down pretty significantly. So we are going to get another. The market is making another low. So that's why it's important to pay attention to what the price action is doing. And you as a trader should know how to interpret price action properly and how to spot these things before they happen. Because how you make money in the market is anticipating what is happening in the markets. Now, taking a look at the Forex markets, we have been speaking about the fact that this market about the fact that the euro was in a consolidation pattern. Now, the market is breaking above this consolidation pattern this morning. So the question is, if we do get a close above this consolidation pattern, will the euro continue to go to the upside, or is this a false break and the market will move to the downside? That is something that we as traders don't necessarily know. So if your trading system states that you will take this trade on the breakout, you will just take the trade and put a stop loss below the market and see if prices move to the upside, because it could explode rapidly to the upside, or we could get a collapse and the market moves to the downside. And that's just trading. That is the realities of trading. Taking a look at the euro looks like it's breaking out, and what we're looking for is if the market can close above this 114.66 level. The market closed above that level, that will be fairly bullish for this market. If it even closes above 115.33, that would be even more bullish for this market, because it would have taken out this minus swing high that occurred in the market. So euro breaking to the upside and looking fairly bullish. Now, Japanese yen is breaking to the downside, and what this is showing you is that we're moving currently counter to the prevailing trend in the market. So if you are a swing trader with a trend following system, then this move is moving against you. And I know our members, we were long the Japanese yen and we have been stopped out of this market. So we have taken a small loss on this Japanese yen trade, because the market has now moved counter trend and counter to our position. Yes, at the Forex technical market update, I show you the good trades and also the bad trades. So what are we looking for now? The market is now coming up to the 618 retracement level and the 7.786 retracement levels. So what we're going to do is wait to see if this market will get some support, because as you can see, there are some support points here in the Japanese yen. So we're going to see the market get some support in this 119.50 level. And another thing that we can look for is where the monthly pivot point is. And the monthly S2 pivot point is at 118.78. So 118.78 is the monthly S2 pivot point. So that is very close to the 119.50 618 retracement level. So we're going to see if the market gets some support at this point in the Japanese yen, around this 119 to 118.70 level. We're looking to see if the market will see some support at this point. Remember, we make money in trading by anticipating what is happening and then reacting. Taking a look at the British pound, we have a move to the upside in the British pound. The market is finally breaking above this resistance level that we're speaking about. And I mentioned the fact that we're stopped out of this Japanese yen trade, but we're currently long the British pound versus the US dollar. And this trade is working out nicely for us so far, for our members so far. So we're looking at resistance, however, in the British pound up at 159.30. This is the resistance level in the British pound at 159.30. And we're looking to see if the market can close above this 159.30 level. So we're some 200 pips away from that level. So the first price target I'm looking for is some 200 pips above where the market is currently. Taking a look at the Canadian dollar. US dollar is strengthening against the Canadian dollar, and we see that the market is making a new high up at 132.46. And the market is, if the market closes the month at this level, that would mean that this swing high has been breached in the Canadian dollar, and you could see further losses in the Canadian dollar. Now, a market of interest to me is this British pound versus euro. We are coming up on a Fibonacci retracement level near this 618 and 786 retracement level in this pair, from the swing high at 75 down to the swing low at 69.35. So we're going to see if the market finds resistance in this level, at this level, and the market starts to head back to the downside on the British pound versus the euro. If the market closes above 74.82, that would mean that the market could see a much larger pullback into the 76 region. Final market we're going to look at is gold. While the euro is doing fairly well, the US dollar is up, the US dollar index is up, gold is not really doing that well this morning, and we're seeing some resistance at this 1160 level in the gold market. And gold, as you know, as I always say, remains weak because we have a series of lower highs and lower lows in gold. So I'm definitely not bullish this market. So just to summarize, if you're a swing trader and you're following trends, you could be seeing some pullback in your portfolio depending on what markets you are involved in. But we are currently also could be at the beginning of some nice moves in the markets, especially the British pound and the euro versus the US dollar. The market is breaking out, and we could be at the beginning of these large moves. Now, just remember, as with anything, put stop losses below the market and put conservative stop losses. You should not be risking more than 1 to 2% per trade. So just because we say the market could do this, that does not give you the license to go out and bet 50% of your portfolio, and the market that the interpretation doesn't pan out, and then you lose half of your portfolio. That is definitely not responsible trading. And that is, if you are doing that, you are gambling and not trading. Okay, so if you would like to follow our trades that we're doing, and we would like to take advantage of our forex trading signals, because we are at a very interesting point in the market, you can click the link below this video to get started. The signal service, you will have up times and you'll have down times, but the whole point is that you should be seeing a positive ROI over the next 12 months or so in your portfolio. That is our goal. So click on the link below to get started, and we could be at the start, definitely at some very interesting times in the markets and some very interesting moves. Thank you very much for listening, and I hope you have a wonderful day.